Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 3rd of January, 2022. Alright everyone, new year, 2022. I hope you all had a great New Year's. I actually stayed home for mine. I didn't do anything too flashy, just stayed home with the fiance and kind of had a quiet night in there. But I saw a few pictures on Twitter of people kind of like at various parties around the world. But I think with the COVID situation, you know, different parts of the world, it still seems a bit all over the place, right? Some people going out, some people staying home. Not exactly sure kind of like what's going on there, but you know, we soldier on, we keep going, and we go into a new year, new exciting things happening. I went over kind of a recap on last week's refuel about 2021 and I gave some 2022 kind of like not so much predictions but kind of outlooks. And as a related thing that I wanted to talk about today, which is related to a tweet that I put out yesterday, and I'll just read out the tweet. It was a 3-part tweet. Basically, I said, in late 2020, there was a strong narrative being pushed that you didn't need to buy or hold ETH. All you needed was BTC plus the DeFi blue chips, aka the crypto barbell strategy. That turned out to be horribly wrong, with ETH strongly outperforming BTC and most of DeFi in 2021. Now there's a new narrative being pushed that Layer 2s are bearish for ETH, so you only need to buy Layer 2 tokens and Alt L1 tokens. It really amazes me how people can still be bearish on ETH after all this time, and how many times these same people move the goalposts. Now, there's 2 other tweets after that, but I want to focus on the first half of this little tweet thread here. So, for those of you who were around in late 2020, like, it's actually amazing how bearish people were on ETH and how bullish they were on DeFi tokens and how wrong they were. I don't have to rehash that for those that were around back then. And if you weren't around back then, I'm sure you've heard about it before. But what I find even funnier was that there was a lot of predictions about what 2021 was going to be and how many people got it wrong, which I also went over on last week's refuel. How I talked about people didn't see kind of like the dog tokens coming, the Alt L1 stuff coming, the NFT stuff coming. And I think that there's a lot of predictions being given right now for 2022. And I feel like so many of them are going to be wrong again. It's so very hard to get things right about this industry. It doesn't matter what time frame you're looking at, because it's such a new industry. There's so many unknowns. There's so many kind of like things that just catch everyone off guard, especially if you've been in the crypto industry for a while. You kind of miss things because you get used to a certain way of things being, and then all the new entrants that come in, I mean, they've got no prior context, they've got no history, they are literally coming in for the first time, so their mindset is very different to yours if you've been in it for a while. And that's exactly why a lot of people actually missed the Alt L1 stuff. Like, they obviously went pretty crazy, and there were some people that caught that train, that saw it coming, but on the most part, most people missed it. And most people missed ETH because they were kind of like had priors about BTC, and I'm going back to like 2017 and even further back than that. So I think when it comes to not just investing in crypto but spotting trends, you really need to try and reset your thinking about it. You can't just like be stuck in a mindset that you were in before, because what ends up happening is you miss things. And I'll be the first to admit that I've missed a lot of things because of that, where I get stuck on a certain narrative, or I get stuck kind of looking at certain things, and I miss things kind of playing out. And I think 2021 was a humbling year for me, especially the second half, where I feel like I had an edge in 2020 and the first half of 2021 where I was making a lot of good investments, and I kind of like saw where things were going. And then the second half of 2021, I kind of like lost that edge, and I didn't see a lot of the stuff playing out. I mean, I think I knew NFTs were going to be big, but I didn't realize how big they were going to be. I didn't really know how to play it correctly. I didn't really place any big bets there. I mean, I bought some NFTs, but nothing crazy there, whereas a lot of people kind of saw that trend coming. Oh, sorry, not a lot, but like some people saw that trend coming and played it really, really nicely there. But obviously, I think like in 2022, there is a way to kind of not just reset your thinking, but also kind of like look at what's playing out, look at what the most popular narrative is, and try to find something that is different to that. Like right now, I think in the Ethereum ecosystem, the most popular narrative is that 2022 is going to be the year of L2. We're finally going to have all this L2 adoption. It's going to be great. It's going to be awesome. Look, as bullish as I am on layer 2s, guys, I'm not convinced that, you know, we can just kind of like bucket layer 2 adoption into one year or one specific year. Like, people go on about how last year was the year of Alt L1s, and a lot of them kind of like got traction, and a lot of them kind of like proved themselves, and you know, TVL dominance went down and all that sort of stuff. stuff. Yes and no. Like, I feel like people just, as I said before, people, not just with the old tail ones, but with anything, the narratives are usually stronger than the fundamentals and the actual traction. And I feel like people get stuck in this hole where they think that there's much more traction for something than there actually is. And this goes for everything. I'm not just talking about the old tail one, I'm talking about anything. Ethereum-based projects, anything. And there are a lot of real projects that get neglected, especially their token prices. There's plenty of the DeFi quote-unquote blue chips that have been neglected for a very long time. Well, their prices have been doing very, very poorly, even though they've been growing, they've been innovating, they've been releasing product. And then the ones that have like a stronger narrative seem to be doing better than them. So I wrote about this in the newsletter today, but basically this is the concept of shifting narratives, where you've basically got these narratives that play out on short-term, long-term time frames, and people get stuck in them, and people kind of like get stuck in that frame of mind. They fail to evolve, and that doesn't make a good investor in my mind. Like, obviously, none of this is investment advice, but just generally, I think that if you get stuck in like an old way of thinking, or if you think things have to play out like they have in the past, or if you think that you can see what's going to happen, even though you've been around for a while, you're not kind of like thinking from a new person's perspective, it can be difficult. And I find it actually really good exercise to talk to newer people in the ecosystem and to see what they're focusing on, and to see what kind of like their friends are focusing on and what they find interesting, because a lot of the time it's very different to what you find interesting. There's plenty of people out there who don't find Ethereum interesting because the fees are too high for them, right? And we have the layer 2s and stuff like that, but there's no easy way for them to onboard to most of those things yet. So they went and played on the other things, right? Obviously, the Polygon POS chain was a big thing as well, but a lot of them kind of like played with Solana or Avalanche or some of the others out there, and that's why a lot of those tokens did very well in 2021. So I think always keeping on your toes and realizing that it's very easy to get stuck in kind of like a boomer mentality, even though you think you're on the forefront of things, especially when it comes to investing. I think that's always a good thing to keep in mind there. So that was kind of my point about this, because I feel like a lot of people got stuck in a mindset in late 2020, and they just kind of like missed ETH completely. And they tried to make up for it with the other L1s in 2021. I mean, it was successful to an extent, but it's always funny to see kind of the narrative shift there. And then, in the second half of my tweet thread here, I said, of course, ETH isn't going to give you a 100x within a few months because its market cap is already high. And yes, you can outperform it by investing in certain other things, but I believe ETH is the most bullish asset in crypto from a risk-reward perspective. It's simply a comfy hold. So I think like people usually have kind of like a not just around ETH, but just like any asset. They usually have like a mentality that they go in with, where they're like, okay, well, if I put money into this, am I going to get like a 10x or a 100x or a 1000x? What am I going to get out of this? I like, as bullish as I am on ETH, guys, you're not going to get 100x from ETH anytime soon. Its market cap is already $500 billion. The 100x from ETH could happen in a decade or something like that, or longer than that, but it's not going to happen within a few months. Whereas there's a lot of other assets out there, not just the alt L1s or anything like that. I mean, many of those alt L1s are actually pretty high market cap now, so I don't think you're going to get 100x out of a lot of them anytime soon. But there's a lot of other things, like a lot of emerging projects, new projects in different kind of categories, whether that be DeFi or NFT, stuff like that are incredibly risky, but they also have the potential to go 100x plus. And we've seen these play out like pretty quickly. I mean, there were a few late last year that were kind of like DeFi 2.0 that went, 100x or more. There was a bunch of NFT projects. Those are not just the NFTs themselves, but like infrastructure projects around that and those sorts of things. A bunch of other tokens. There's a lot of scams and Ponzi's as well that would go up really high, but then come crashing down. But the thing is that these things are always much more risky than something like ETH. Like, there's a reason ETH is already worth what it is. I mean, ETH was obviously much riskier a few years ago. That's why you had a better return. But now, ETH and Bitcoin as well are much more mature as assets. Obviously I still believe ETH is incredibly bullish, but if you're looking for 100x, then you have to play in the riskier assets. That's just the way it is. And you can structure your portfolio however you want to structure it. You can have like 10% of your portfolio just like doing complete degen stuff, where you basically say to yourself, okay, well, there's a high chance I'll lose this 10%, but I'm going to do it anyway because I want to make that 100x. Whereas you keep most of your portfolio in quote unquote safer assets like ETH. And you do that because say you put 10% into something that goes 100x, that is still a massive win, right? Like, but say you put, say you did it another way. Say you put 90% of your portfolio into something, and you kind of said to yourself, okay, I'm going to get 100x from this, and then in reality it just crashes, and say it crashes like 50%, and you lose 50% of your almost all your portfolio. The risk reward is kind of like out of whack when you do it like that. So that's how I usually play it. And obviously this isn't investment advice, but this is how a lot of people play it. They don't put their whole stack into something, or at least most people don't put their whole stack into something and hope that they're going to get like a massive gain out of it, and it's going to be all well and good. Many of the best investors will play it like safer like that. Yes, they'll do like risky stuff, but only with a small part of their portfolio. So there's that aspect to it. And then the last tweet I just said, moral of the story, don't take investment advice from crypto Twitter. Most people get it very wrong. I believe the best course of action is to learn from smart people with a proven track record and apply their thinking strategies to your own. So cheers to a profitable 2022 for all. So, I mean, I think that if you're following people who are just shilling a new coin every week, that's not going to be a good time for you. I feel like the people who shill a new coin every week are the ones just unloading it every time they're shilling it, because no one really shills a coin before they've bought it. And even if they say they have, there's no way for you to verify that, right? Because, for example, someone could say to you, some random Anon Twitter account that has like a decent following can say, you know, I love this coin, I believe in it, I think it's going to go like 100x, it's going to be awesome, you know, come join me, this is, you know, for such and such reason, and then they're just offloading their tokens on you with their wallets, and you've got zero way to prove any of that, because they can keep their wallets completely anonymous. You've got no way to tie it back to them. If they slip up, you do, but even then, there's hardly any consequences for this sort of stuff. Like that Anon account, if it becomes really bad, they can just start another account and do it all over again, and this sort of stuff plays out all the time. I'm sure you've all seen it, right? Like on crypto Twitter, plays out all the time. It's the concept of exit liquidity, especially on the lower market cap things where there's not much liquidity and not much volume. People need to kind of like shill these things in order to exit them once they've entered. But that's always, it's always a kind of like dangerous game you play when you're playing in these sorts of things. Incredible amounts of risk, but also incredible amounts of rewards if you play it right. And I think this isn't advice, but like the number one thing I always like to keep in mind is that don't look at the wins that played out last year and say to yourself, oh, if only I'd put money into this, it would have been this much and it would have been awesome. That is the worst way to think about it, because what ends up happening is that you think that the next thing that you're really bullish on is worth you putting the money that you put in that other thing that did really well, and then it doesn't play out the same way. It never plays out the same way. It's not going to play out exactly the same way as it has for the other thing. And I know a lot of people have been doing this lately where they're like, oh, if only I had invested in the alt L1s last year, I knew they were going to pop off because Ethereum fees were high, the narrative was there, blah, 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 and now they're all chasing it now again. And to be fair, they can still play out, it can still go up, it can still make money there. But the thing is that I feel like that trade is pretty much like done at this point in terms of like giving you massive amounts of returns, unless you find something that is kind of like a much lower market cap. But a lot of them got just re-rated up already. And the same thing happened with DeFi, mind you, right? During DeFi summer. So I think that when you're looking for the next kind of like 100x or more than that, you really have to not only be very careful about what you pick, but you have to kind of like write off the money that you put into it. You have to say, okay, well, this 10% of my portfolio, whatever percentage it is in this, and I'm comfortable losing everything, but if it plays out really well and if I'm right about my thesis, I could make a lot of money from it. That's all you have to do, and you really have to come to peace with it. You can't just tell yourself, oh yeah, I'm at peace with this if this goes to zero. No, you actually have to write that money off and not even think about it. It's either 100x or zero. And I know that sounds like gambling, because it really is, to be honest. Like if you're kind of like degenning into things, it is very close to gambling. It's pretty much gambling, like, if I'm being honest. I mean, and we've all been there, we've all done it, and I guess like you kind of like switch modes depending on where you're at. Like if you have a lot of money already, you're in wealth preservation mode. If you're just starting out, you've only got a few $1,000s to your name, well, you're probably going to be like, well, I don't care, like a few $1,000s, I can afford to lose it. I'm going to go and like do all the degen stuff because the reward is like lucrative if I play it right. But it's all up to you. It's up to your decisions, and of course, I'm not here to give investment advice. I'm just here to kind of like give my experience and how I kind of like view these things playing out. So I just wanted to highlight this thread from Vitalik over the weekend. He put out a thread, which I'm sure a lot of you already saw, where he said, Happy New Year. Today, a mini tweet storm of some of the things I've said and written over the past decade and what I think about those subjects today. So a lot of these things go back to 2013, 2014, 2015. A lot of them don't have to do with Ethereum specifically. It's about Bitcoin, Bitcoin Cash, a bunch of other things. I suggest giving this thread a read if you somehow missed it. It's obviously a very popular thread here. I really liked it because, I mean, it's obvious that Vitalik is one of my favorite people in the ecosystem for a number of different reasons. I just think that the fact that, one of the major reasons is the fact that Vitalik has created such an incredible movement in Ethereum, such an incredible ecosystem, and he's still as humble as he is. He's still as dedicated to Ethereum as he is. He's still able to have such self-awareness to actually call himself out on a lot of this stuff that he made predictions about that were wrong, and kind of like why they were wrong and what he got wrong, what he got right. All those sorts of things. I just find that incredible. And the fact that he's so young as well. Like, you expect this from maybe older people who have more wisdom under their belt. But no, Vitalik's young. Like, I think pretty sure he's 27. So he's 3 years younger than me. And like, he's just, he's a very, very unique and special person in the world. And I'm very glad Ethereum has him in the ecosystem still. You know, obviously he could have created Ethereum. I mean, he could have like just stopped a few years ago. He is set for life in terms of money. He doesn't have to do what he does, but obviously he does it for more than money. He doesn't really care about money from what I've seen anyway. So yeah, definitely go give this thread a read. It is a really great one. I loved getting his perspective on all these different things here. So another great thread from Polynya over the weekend, going over some shower thoughts on what they'd like to see from rollup tokens. Now, I spoke about rollup tokens last week on a few of last week's refuels. I mean, I've been talking about them for quite a while, but I wanted to kind of like go through some of the points that Polynya brought up here and add my kind of like color to it. So the first point, which I believe is the most important that I hadn't actually considered or thought too deeply about, was Polynya says, a vampire attack L1s to oblivion. And yes, this includes Ethereum. Smartly target active users across different L1s. Fewer tokens drop to the yield farming, chasing chain hoppers and high value Ethereum users. So we all know vampire attacks, right? They've been used to, I wouldn't say incredible success. I would say that there's been kind of like mild success with the vampire attacks. They have to be done right. They have to be done in such a way that it not only, vampire attacks liquidity, but it's used as a marketing tool as well, where everyone's talking about it. So if the L2s do it right, they can vampire attack these other L1s, including Ethereum L1, and move a lot of that liquidity to the L2, where it would possibly stay, even without token incentives, because the L2s offer a much better experience than pretty much all the L1s. Even, I mean, yes, they're more expensive today, but even in their kind of like more expensive state, they just offer a much better user experience, in my opinion. Maybe, it depends on the L2 you use and things like that, but in my opinion, they're much further along. So I think that they have a pretty good opportunity to vampire attack these L1s, get that liquidity across, and basically start growing their ecosystems out, because once you have the TVL there, a lot of the other things kind of like fall into place, and a lot of the network activity falls into place, and it's a really great marketing vehicle. So I thought that was a good shower thought there. I think there's a couple of others here. I'm not going to go through them all, but this one: distribute at least 70% of the tokens to the community/treasury, and at least 70% of tokens to active circulation. Have a clear long-term plan for incentives. This is very important, as we've learned from DeFi liquidity mining. If you kind of like have 5% of the token circulating and 95% kind of still not circulating, and the fully diluted market cap's really high, your token ends up just stagnating or going down continuously, and you don't build a community like that, because no one wants to buy the token, no one wants to hold it, no one feels like they're getting rich. Making your early community rich is the play, is definitely the best way forward. So airdropping a lot of the tokens, because a lot of these L2s are going to have high market caps from the get-go, no matter what they do. So I think that the only kind of choice they have to distribute tokens in a fair way is airdropping the majority of them, because then the users get like a large stake, like depending on the airdrop amount in the network already from the get-go. And a lot of people will sell it, of course, but that's just distributing it out to the people who want to buy it from there. And then you kind of have a much better distribution. So I think that is definitely a Definitely something to keep in mind for the L2 teams here. And then the last point was Polynya saying, liquidity farming is old news. Keep some on major assets and the rollup token, but keep a tight lid with very low inflation. This is another mistake that a lot of DeFi projects have made. They've done too much liquidity mining too fast. You have liquidity locusts that come, dump the token, no community gets built, and they just leave from there. So I think that the L2s have to be very careful with this. Do light incentive programs. Don't just do it as kind of like liquidity mining, giving away tokens to liquidity providers or anything, or just don't just do that. Do kind of like liquidity incentives or token incentives in terms of like paying people to develop on there, being like, okay, well, we'll give you a certain number of tokens if you come and develop or port your app to our L2. That's probably a better way forward there. But there's a few other kind of points here that Polynya made. I'll link this thread in the YouTube description below, but I'm going to move on here because I'm running out of time. So Marius from the Go Ethereum team gave a kind of like update thread on the Kintsugi testnet, which on the 31st of December, which was like 4 days ago now, so it has already hit block 100,000. It had already had 97,000 accounts on it, and it seems there's a new transaction every block as well. So it's a couple of other stats here, outdated now, of course, because this was from about 4 days ago, but cool to see the Kintsugi testnet just, you know, plotting along here. It seems to be going really well. I'm sure we'll get an update in the next couple of weeks around how that's gone and everything like that. So really, really cool to see that. Santi here from the Proof of Humanity and UBI project basically put out a great tweet where he said, El Salvador is top-down crypto adoption, Argentina is grassroots bottom-up crypto adoption, El Salvador enforces Bitcoin, and Argentina embraces Ethereum. At the developer, user, and entrepreneurial levels, the rates of crypto adoption in Argentina are way ahead than any other country out there. The pandemic led to a quantum leap in the sector. So this is something that I brought up before, where I thought that El Salvador's way of adopting crypto, obviously Bitcoin, was very coercive. I don't think that it was the great way to do it. I don't think that the people of El Salvador really had a say in it. I think that the government just wanted to do it, or the president just wanted to do it, and he did it, and he keeps buying the dip apparently, and it doesn't feel very organic at all. It feels very, very forced, aka top-down crypto adoption. Whereas within Argentina, they've actually been building out an ecosystem for the last few years, primarily around the Ethereum ecosystem. There's a lot of really, really cool Ethereum people that are out of Argentina and have lived there, you know, their whole lives, or come from there, or born there, and they're basically part of the grassroots bottom-up effort. They're not, you know, the government isn't trying to force crypto on them. No one's trying to force crypto on anyone. They've been using things like DAI for years, ETH for years, advocating for crypto, getting it kind of involved with their day-to-day activities, and obviously Argentina has high inflation as well of their native currency, so it's been kind of like a lifeboat for them. But yeah, as Santi puts it here, it is a bottoms-up approach, which is what crypto should be. And this is what I think a lot of projects get wrong, not just Ethereum and Bitcoin or whatever, but like projects in general in crypto, they try to do a top-down approach. That doesn't work in crypto, because crypto is all about ownership. Web3 is all about ownership. If your users and your kind of like, I guess, token holders in your community doesn't feel like they have any kind of like ownership or say in the protocol, they'll just leave. They'll just go somewhere else, because the switching costs are so low within crypto. Whereas if you feel like that within your own country, the switching costs are much higher, right? Not just because like leaving your country, depending where you are, can be quite difficult, but because you have your roots there, right? You have your family there, you have your friends there, you have a house there, you have, you know, you're used to the area. And it's just very, very different. But within crypto, switching cost of particularly applications is very, very low. Maybe not for ecosystems. Like, for example, the switching cost from going from Ethereum to another L1, if you've been a hardcore Ethereum, is obviously really, really difficult. But the switching cost from going from application to application is super, super easy. So I think that all projects within crypto should always be a grassroots bottom-up approach because of that kind of like ease of switching costs there. But yeah, great tweet from Santi here. Moving on, Brabtly set out another kind of tweet going over December 2021 stats for ENS. There's been a new record for most .eth names registered in a month, 109,000, all ETH L1 despite the high gas fees. Over 250,000 owners now, 600,000 names, 91 new integrations, now 423 total, $5.8 million in revenue all goes to the DAO, and 99% of OpenSea volume for domains. ENS is dominating it. We all know it is. It's awesome. We all have our .eths. It's really, really cool to see the progress there. Mihailo from the Polygon team put out a recap of 2021, and Polygon had a massive 2021. Like, I was thinking about the other day, thinking back to the start of 2021, and like basically, I mean, that's when Polygon did their rebrand in about February. I mean, so Matic did their rebrand to Polygon in February. They were basically not even on the map. Now, there's over 100 million wallets on the POS chain, over 3,000 apps, 1 billion plus transactions, 6 new solutions, which weren't out at the beginning of 2021, by the way. The SDK, Polygon Avail, Hermes, Nightfall, Maiden, and Zero. Top Web3 names such as Uniswap, Aave, and OpenSea are on Polygon, and big brands such as Dolce & Gabbana, NFL, Macy's, and everything like that. So Polygon had an absolutely massive 2021. I'm looking forward to an even bigger 2022 from them there. So there's an account that I've come across recently that I just wanted to highlight called pseudotheos, who is doing a lot of great threads around Ethereum and ZK lately. So I really like this thread where they basically put together a thread on what do all the ZK terms mean. So what all the zero knowledge terms mean. Go check out this thread, but I also highly recommend going and following this person because this may be another Polynya in the making. Like, there's not often that I come across people who really know their shit and know how to kind of like, I wouldn't say dumb it down, but like explain it in such a way that everyone can understand. And I think pseudotheos is definitely one of those because it isn't just this thread. They've been doing a bunch of different threads lately, not just one-off threads. You can see here everything like that. Look, all these threads. I mean, scroll through their profile to kind of, I guess, like have a look here. But yeah, just wanted to highlight this account for a highly recommended follow. And Pseudo, if you watch or listen to the Daily Gwei, please reach out to me and DM me. I do have a backlog right now, but I'd love to talk to you. I have a few questions I want to ask you. But yeah, definitely go give this person a follow. Aave. So Stani announced their first announcement of the year from Aave, which is that they are building a mobile wallet. I think the wallet game is going to heat up pretty quickly in 2022 and throughout because, I mean, when you think about it, the kind of like wallet game is such a huge kind of business kind of opportunity because it's like the front door, right? Like centralized exchanges are a front door right now in terms of like getting people on with fiat on and off ramps. But once we have all these mobile wallets that have like all these on ramps integrated and everything like that, they're going to be the front door for most people. I mean, look at Argent, for example. They already have native L2 integrations happening. They've got fiat on-ramps happening. They're bringing the Web 2 experience of 1 or 2 clicks to Web 3. So I think that's a huge opportunity. And yeah, Aave seems to be building a mobile wallet here, which I am looking forward to learning more about. Another related Aave announcement is that Aave V3 is going to be ported to StarkNet. So there's currently a community effort to get Aave V3 on StarkWare's StarkNet network here. That's really, really cool. Obviously, we want to get all the top kind of like quote-unquote blue-chip DeFi projects from Ethereum L1 to all the L2s. So it's great to see this already happening here. I hope to see Aave V3 live on Arbitrum really soon and Optimism as well because obviously they both don't have whitelists and they're both EVM compatible or equivalent. So it should be very easy to get Aave V3 on there. I'm sure it's coming once Aave V3 goes to Ethereum mainnet as well. I would actually love to see kind of like a multi-deployment there where they do kind of like V3 on Ethereum mainnet, L1, Arbitrum and Optimism, and even the Polygon POS chain as well. I'd love to see kind of like a multi-pronged approach there. But anyway, last update here because I've gone overtime. I believe I think I've gone overtime, maybe not just yet. Yeah, this kind of like teaser from Jasper here, who I've highlighted kind of like before, I think, but basically teasing a new kind of integration with jpeg notifications here. So Jasper works at Zapper, by the way, so this might be part of their kind of like mobile wallet effort here. So you can see here that there's notifications flying in for people kind of like interacting with NFTs, such as minting an NFT, receiving one. Obviously, you'd probably just kind of like watch someone's address for this sort of stuff and be able to kind of like watch what they're doing, what NFTs they're kind of buying or speculating on, things like that, which I think is really, really cool. As I said before, the mobile wallet space is going to heat up really, really wildly in 2022 and beyond. There's, as I mentioned, Argent, there's Rainbow Wallet. I mean, obviously, MetaMask has a mobile wallet. There's Coinbase Wallet. Zapper's designing one. Alves coming out with one. It's going to get crazy, and I just can't wait until we have like a really, really, really nice mobile wallet that has all the integrations everyone wants with kind of like L2 integrations, bridges, all that sort of stuff there. It's going to be awesome. But I think that's going to be it for today. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give the video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.